Hello, everyone. I'm often asked, what's the best type of life insurance to have? And I'll jokingly respond, it's the policy that you have in force on the day that you pass away. Because when you consider everything, ultimately that's the most important day to have life insurance. Now, to the point of what type of life insurance would best be suited for you, there's going to be a variety of things to keep in mind with that. Your age, your health, your financial budget, your goals and objectives, your debt and income. Those are all going to play a role in what is the best type of life insurance for you. Now, life insurance is categorized two different ways. You have term life insurance and you have permanent life insurance, which is sometimes called whole life insurance. I've heard that used interchangeably. And what I hope to do with this video is to provide an overview of each type of the most common forms of life insurance, the advantages to having each kind of life insurance, and the types of people who these policies would be best suited for. Now, when it comes to recommending the types of life insurance to people, when I'm meeting with clients, I generally use this rule of thumb. Term life insurance I will recommend for people who have a diminishing debt, something like a mortgage or a student loan. This way, when the debt disappears, we can time it to when the term policy expires, and you don't have to worry about renewing it. Whereas whole life insurance, that's going to be something more permanent that you'll keep for the rest of your life. And you have that for things like your death benefit and to build up some cash value to use later on. Now, the first type of insurance that I want to discuss with you is term life insurance. And this is a pretty straightforward product. You buy the product based off of a certain amount of time. It ranges from 10 years to 30 years in most cases. And you decide how long you want it for, you decide the death benefit for it, and you pay the premiums each month. It's that simple. Term life insurance doesn't provide a cash value component. It's just the death benefit protection, and that's what keeps it simple. Some of the advantages for term insurance, the big one's affordability. You can get a higher death benefit for a lower monthly premium. And the main reason for this is because you don't have this for the rest of your life. Now, flexibility. You have the ability to choose what the term length is, whether it's 10 years, 20 years, 25 years, 30 years, whichever suits your needs, you can decide on that. You can also decide on the death benefit. Maybe you've got a $200,000 mortgage that you have to protect, and that's the value that you go with. It's completely flexible, and that's definitely an advantage. The simplicity, as I described above, that's straightforward. You know, you pick the term, you pick the death benefit, you pay for it, bing, bang, boom, you're done. Super simple to use. And as I described, the people who would be best suited for this policy are going to be those with a diminishing debt, something like a mortgage or a student loan, because once the debt disappears, so can the term policy. Now, the second type of life insurance I want to discuss is whole life insurance. This is a permanent product that you will have for the rest of your life as long as you maintain the monthly premiums. Part of the premium that you pay is invested, and that's how you build up a cash value component to it that over time you can use for a safety net, for paying emergency type expenses. You can use it for retirement income, whichever your heart desires. It's there as a component to it. This is a very stable, lifelong product, and I often recommend it for people who just want to kind of set it and forget it. That's who is best suited for this product. Some of the advantages to whole life insurance is going to be the guaranteed death benefit. You don't have to worry about that fluctuating. You also don't have to go through underwriting any more than the first time that you go through it. The cash value accumulation is definitely an advantage because you can use that for anything that you need so long as it's there. And the stable premiums. You won't see any fluctuations in the premiums as you get older or unhealthy, anything like that. You don't have to worry about an increase in the premiums. And as I said, those who are best suited for it are individuals who are looking for lifelong coverage with a stable financial product and an opportunity to grow wealth. An indexed universal life insurance policy, otherwise known as an IUL. I have to say this is probably my favorite product out there. And what it is it's just like a whole life insurance policy where you have the cash value component of it. And the cash value is linked to market growth. So you have an index for the stock market, like the S&P 500. When the S&P 500 does well, your IUL will do well. However, there's a floor for losses on bad years because these policies have minimum interest payments. And so that alone basically eliminates a lot of the risk involved with that because you see growth on good years, but you don't see decline on bad years. And that's a huge selling point to me. And the reason they do this is the money is not directly invested into the market. It's just linked to it in a mirrored fashion. Other advantages to an IUL are the cash value grows at a tax-deferred basis, meaning while you're in your 30s or 40s during your prime earning years, you might be in a higher tax bracket. But when you get to your retirement years, your income's less, you're in a lower tax bracket, and that's when you cash out your IUL to maybe put it into a retirement income. Since it's tax deferred, that's when you pay the income tax on it, the capital gains tax, when you're in the lower tax bracket. And therein lies an advantage. Of course, I always recommend you speak with your tax specialist before you make any moves like this because they're the experts in that field. And another huge advantage to an IUL is its flexibility. You can be flexible with the premium payments, whether you lower it, maybe you lost your job and you want to keep the policy active, so you just pay for the cost of insurance. Now, you don't see the cash value component of it grow, but you also don't lose the policy for non-payment. So it stays in force, you don't have to go through underwriting, and when you get the job again, you can readjust the premium payment to make up for the cash value. Or maybe you got a bonus at work and you want to invest it. You could make a single payment to the IUL, and that will boost your cash value to it. You could also adjust the death benefit as you get older. So maybe you have a larger house that you need to cover. You can adjust the death benefit to meet those needs. So there's a whole lot of flexibility involved with that. And because of these advantages, the people who would best be suited for this product are, I would definitely say, younger folks who have time on their side. They could build up the cash value. People who need flexibility. Maybe you're a small business owner, like suppose you're a real estate agent, and so on months where you're not making a commission, you need to lower your premium, but then during your busier month, you got a whole lot, maybe you've got 4 or 5 closings a week, you can put more money into the IUL. So it balances out. And like I said, all those reasons is why that's my favorite product out there. The final type of product that I want to discuss with you is a final expense life insurance policy. And this is basically a policy to help cover end-of-life expenses. Maybe leave a little bit left over to cover any kind of debts that you have. But the main function of this policy is to pay for funeral costs. The advantage to this is its affordability. The death benefits usually cap out at about $50,000 in most cases. Therefore, since the death benefit isn't that high, the premiums aren't going to be that high. They're also usually flexible in terms of what you want the death benefit to be. These products are usually marketed to seniors. And so seniors being on a fixed income, they might get a policy that maybe it won't pay for all of the funeral, but it'll pay for some of it. But it's within the realm of what's affordable to them.